SPX jumped plus 0.4%. As Jim Cramer says, potential stock market bottom is tied to interest rates, not war headlines, lifted semiconductors and consumer staples. Welcome to your daily market briefing for 2026-04-06. The broad market traded with a firm tone, as SPX closed plus 0.44% and NDX finished plus 0.61%. Leadership came from XLP, XLY, while pressure showed up in GLD, XLU. Here is the broad market snapshot. S&P 500 up 0.44%, Nasdaq 100 up 0.61%, Dow Jones up 0.36%. Next, the ETF curve set shows where relative strength and weakness developed through the session. Leaders were consumer staples, plus 0.94%, consumer discretionary, plus 0.82%. Laggards were gold, minus 0.41%, utilities, minus 0.37%. Across global markets, the session leaned constructive globally, with most major regions holding up. Asia was under the most pressure, with Shanghai and Japan leading the retreat, while Europe held up better than the rest. Stepping back, the broad market traded with a firm tone as SPX closed plus 44% and NDX finished plus 61%. Leadership came from XLP, XLY, while pressure showed up in GLD, XLU. The stock market fear and greed index is 25, which sits in fear. That points to a cautious tape, where traders still want confirmation before adding risk. On the S&P 500 heat map, leaders were semiconductors, plus 1.32%, consumer staples, plus 0.94%. Laggards were utilities, negative 0.37%, healthcare, negative 0.36%. Fed thinking is still central to the tape, and releases like upcoming macro releases are being used to reprice the policy path. Firmer data would make it harder for the market to lean into quick easing hopes. Commodity action was split. Brent led while gold lagged, so the move looked selective rather than broad-based. The index board leaned higher, with Dow carrying the weakest tone and Nikkei holding up best. Mega-cap curves were mostly positive, which points to a broad tone move more than a single-name story. Forex showed a risk-off currency tone, with the sharpest move in AUD-USD and the best relative strength in USD-JPY. Crypto remained under pressure, which helps confirm the broader market risk tone. Bond curves suggest yields were mostly rising, so rates still mattered for the session. The main focus stayed concentrated in semiconductors and consumer staples. The pressure point remained utilities and healthcare. Into the next session, the key checks are the next macro events, the path of yields, and whether leadership broadens or narrows. Traders should also watch whether Jim Cramer says potential stock market bottom is tied to interest rates, not war headlines. CNBC keeps driving headline risk. That is the key takeaway for today's market. The broad market traded with a firm tone, as SPX closed plus 0.44% and NDX finished plus 0.61%. Leadership came from XLP, XLY, while pressure showed up in GLD, XLU. Keep watching policy signals, index leadership, and the next macro catalysts. Subscribe for the next daily market briefing.